And Sun Pharma is a tad bit soft at the moment. But let's take a look at the broader market. Zomato is the one that's really soaring now, 6% higher on that stock on the back of reporting profits for the first time ever. And of course, the gross order value has gone up 11% quarter on quarter. So the street definitely likes that. And let's not forget, Zomato has rallied significantly in the last couple of months as well. Despite that, the street is giving a 2 thumbs up to the numbers, up almost about 7% now. So that's clearly the stock of the moment. But even the market, right? Overall, I mean, after 2 days of a fall, people are lapping it up.
Well, that's right. So on Zomato, I think there was a large trade that took place as well. So just keep an eye out on that. And, as market open, I think we had a large trade out there. So that could be one of the reasons as well that stock is bobbing around. Well, a couple of other stocks. Dabur came out with its set of numbers late last in the second half of trade yesterday. And the management brushed aside any kind of concerns with regard to the honey. The stock is up close to 4%. LIC Housing Finance as well, reacting to its numbers, up close to 3.5%. And Karnataka Bank continues its strong ground. Well, that's up a good 3% as we speak. That said, even Dixon Technologies is moving up. On the flip side, RBL Bank has pulled back close to 3%. Deepak Nitrite as well is down close to 2.5%. And Vedanta Pros, that promoter sale, yesterday they sold close to 4% stake in the company. The street is a little bit concerned with regard to funding at the parent, that's Vedanta Resources, for the time being. That's opened up down close to around 2% on. Prashant.
Well, Nigel, thanks for that. Well, it's positive. Across the board, it's positive. And we've been, for the last 2 days, I mean, actually, on the day that Fitch downgrade, from that point on, we've been saying, we put that piece out day before yesterday as well, that in a strong market, in an uptrend, the market kind of looks through news flow like this. This is not 2011 when the S&P downgrade happened and the market sold off 10% consequently over the next 1 month or so. Too early to maybe say that everything is behind in a definitive way, but generally things have been up. We highlighted how the mid and the small cap part of the market even yesterday was higher. All right, let's quickly take a look at a few other names which are looking good. LIC Housing Finance is up 4%, 410, 411 on that name at this point. Big volumes, by the way, on that one. IRFC has been rallying for the last few days. It's up another 6%, large volumes there. Dabur, we spoke with the management yesterday at 2:30, 5.5%. That's a big move for a name like Dabur, right at the word go. Cipla is up 4.5%. So that's at 1,218, 1,219. Lots of conversations and chatter around that potential deal where promoters will get out and global private equity players like Blackstone, etc. are interested. We reported that as well. SJVN is up 2%, 3%. There's something called Prakash Pipes, which is rallying for the last few days. It's up another 6% or so. Stocks at about, 241. So, there's a very, very stock-specific market with lots of action. I think a bulk of the movers we have highlighted. Max Health is down about 4%. On the downside, there's not very much. Chennai Petro maybe 6.5% right now. And you've got a RBL Bank, which is down about 2% or so as well. 100 points almost. 19,477 is where we stand at right now. Well, Sunil Singhania is now joining us, founder at Abakkus. Needs absolutely no introduction to our viewers, regular or otherwise. Sunil, great to have you with us here in the studios. Thank you for making the trek. How are things looking, Sunil, especially from an earnings standpoint? What's your assessment of Q1 so far and what this would mean for earnings for the full year?
So I think Q1 earnings so far has been pretty good. Obviously, there have been equal number of upgrades as downgrades, but I think overall, if you see the earnings trajectory has been pretty robust. Obviously, sectors like banking, which were expected to do well, have done well. In fact, done better than what was expected. And one good thing is that the capital goods / infrastructure side of the segment have also done very, very well. In fact, some of the sectors like steel and cement, though not on the margin front, but at least on the demand front and the volume front have done exceedingly well. There are some sectors which were expected to do not as well. Some of them have not done.
I mean, chemicals.
Chemicals very clearly. And I think it's a function of obviously margins shooting up in 21-22, and then we extrapolating those margins to continue. Yeah. And second, obviously, there's been a demand slowdown as well as China opening up has also led to higher supply. So I think, but overall, if you see, except the consumption pack, which maybe the demand has got deferred to the second half of the year, for a multiple of reasons. I think generally, earnings have been pretty robust.
Okay. Prashant, I thought you're going to start by asking him whether he got spared the traffic today, because he, and the trek is correct, right? I mean, you do Goregaon to Bali.
Yeah. So today I left early, that's why. Otherwise it's crazy.
Okay, but I mean, for the market, it's been a crazy ride, right? Almost at 20,000. Of course, a little bit of niggling worry here and there. How do you generate alpha in this market now? Where do you see pockets of leadership coming from?
So one is obviously, in this kind of a market, it's challenging. Not only in terms of finding value, but also in terms of execution. And I think the second part is more challenging than the first part. There's so much interest in the market. The moment, there is even an inkling that someone is interested in a particular company or a stock, the stock just flies off the shelf. At the same time, I think what is needed obviously is a little bit of patience and discipline. That's the virtue. These kind of markets suck you in. I always say this, that in a trending up market, the time taken to research stocks reduces and the size increases, and vice versa. In a trending down market, you tend to do much more research, and the size you put in is small. But I think with experience, you learn that you're okay if you miss a couple of stocks here and there, as long as you maintain your discipline. India is a country of entrepreneurs. India is a country of so many listed companies. You'll get something now and then.
Well, Sunil, good to see you and good to have you in the studio. Since you briefly mentioned cement as well as steel, I'm going to focus on the cement aspect. I think many years ago, you were quite bullish on the small cement company that just got sold. And I think in your earlier avatar, you were one of the first few in there. How do you see this space shaping up? Because one school of thought is the smaller guys will get acquired by the larger guys. The other school of thought is things could get difficult now. You have a couple of aggressive large players in there, building capacity big time. So oversupply could actually hurt the industry. Your take?
No, so 2-3 things. One is obviously right now the demand and supply is pretty much matched. Yes, there is capacity coming up. But you have to understand one thing, Nigel, that on a 400 million ton of installed capacity and approximately 350 million tons of demand, even a 10% increase in demand is like setting up 3 million ton cement plants. The challenge has been that last 3-4 years, the demand has not been as robust. And therefore, even some incremental supply causes a little bit of imbalance, particularly region-wise. Some regions there is a huge demand-supply mismatch in terms of more supply, particularly on the southern side. But if you are banking on the infrastructure spending happening, which you are already seeing, then this growth of 8-9% in terms of demand annually means that in 3 years you need like 120-30 million tons of cement capacity, which is not going to be very easy. Because you have land issues, limestone issues, and I think the recent acquisition is very clear. The motivation was the huge limestone reserves which were there.
Sure.
So I think this is a good sector, but it's not an easy sector. I think the ROEs have historically been pretty low.
Yeah.
And from our perspective, we are very ROCE focused. So that's why our exposure to cement is very limited to a few companies where there is ROCE. But I think you are right that there are 2-3 now big groups or big buckets, like you have Ultratech on one side, you have Adani Group on the other side, and then you have 3-4 like Dalmia and Shree and all trying to catch up with 30, 40, 50 million tons of capacity. It is in the interim, maybe what you're saying might be right, but ultimately consolidation always helps.
Yes, it's good.
So instead of having like 5 million ton cement capacities, if you have 3 or 4 100 million ton capacity, it definitely consolidates and makes the industry much more stabler.
Sunil, just a couple of themes, and I want to narrow it down. So let's talk about areas where there is long runway of growth. Near term, maybe valuations are high. EMS is one area which gets highlighted. The laptop, the tablet bit, I think yesterday. What's your view? Do you own any names, and if yes, why, and if not, why?
So we used to own, we sold off because we found it a little expensive. I think the space is very interesting and very exciting. However, we're always of the view that exciting space does not necessarily mean exciting stocks and vice versa. So the space is good. The margins are very narrow, 3%, 4% narrow. And it's not, entirely sort of having a moat in terms of, entry restrictions. I am sure that in India you will have 50, 100 companies coming up. Obviously, the larger ones would be in a class apart, but there will be too many of the smaller or the mid-sized ones. And as and when they start to come into the IPO market, this whole, I would say, the premium for which is there because of scarcity might go away. The space is exciting, absolutely no doubt about it, but I don't think they will make more than 2-3% margin going forward.
You know, one more theme. It's a very small area, but I found it fascinating, but never spent the time to understand it. You own a company that's been water purification. I think you have shareholders in Iron Exchange, right? What's the runway for growth there? Because there are not many listed companies in that space as well.
So there is, again, you know, a lot of exciting things happening. One is obviously even on the I would say the manufacturing side, nowadays environment has become very, very important. So this zero discharge has become now compulsory. So that is one part of it. Second is the whole government mission of providing drinking water to everyone. Third is obviously sewage treatment, that you can't just let sewage go into the seas and the oceans, which used to be the case. You have to now treat it. So I think across the board, there is a huge opportunity. And the bigger opportunity is obviously government-sponsored programs. So when you look at every state, I think they have budgets which are like funded by the ADBs and the World Banks and so on and so forth. And on the other hand, you have the private sector capex picking up, so you will have opportunity there also. I think it's an interesting space to
And
be.
valuations are okay? For
See, valuation depends on what your growth estimates are. You know, so the only company which is listed, I think it's not as cheap as it used to be, but it is still comparatively, you know, compared to all the other capex and compared to the growth, it's still pretty attractive.
Okay, by the way, don't lose sight of the market, which is also looking very attractive at the moment. Over 100 points higher now, and Zomato is clearly the stock of the day, stock of the moment at least, 12% higher. Sunil, I want to ask you about these platform companies, but before that, one space that you've been investing in is this consumer durable space, and you know, Polycab has been one of your top holdings in your all-cap PMS portfolio. Stellar numbers coming through this quarter, but also the stock has rallied quite a bit. You think the best of the gains are behind us in names like Polycab, or is there more to go?
So, you know, if you actually see, Sonia, what has happened in this market is obviously there are more, I would say, investors eager to put in more money than earlier. And the other thing is wherever there is earnings stability and earnings growth, and particularly surprise on the upside as far as earnings, delivery is concerned, I think markets have rewarded disproportionately, and I think that has also been the case. The other thing, there is always a case where, you know, the market leader and the second company in that space, the valuation gap was pretty large. I think in the case of the company you mentioned, I think they have delivered results which are better than the market leader. And even now there's a discount compared to the market leader in terms of the valuation. So, you know, maybe there is a switch from one to the other. Having said that, I think this building material and consumer companies are our way of playing the demand for housing.
Realistically.
As also, you know, the fact that I think India is also moving from only a need-based economy to a want-based economy. Yeah. So we always say that right now 1/3 population is in that want kind of, income bracket. 2/3 is still in that need thing. And this will change to 2/3, which will have some want in terms of their income allowing them to be, and only 1/3.
I know the younger generation definitely has moved completely to a want-based economy.
No, but the income levels are also supporting it. No?
So does that support the argument for names like Zomato as well? I mean, profitable for the first time. Do you think there's more scope for these?
So I know I adore all these platform companies for what they have created in terms of, you know, making our lives easy. You know, we never would have thought that we could order from any restaurant at the click of a button. Our only thing is that we are a little bit very clear in terms of what we invest in. So we are very value conscious as well as we are very number focused, and we don't invest in companies where the return on capital employed is at least visibly less than 14-15%. And therefore we as investors don't invest, but I am very sure that these are great platforms, great moats, very difficult businesses for anyone to enter. And as you rightly said, you know, we are now, it's like a way of life for us. It's not something which is like one-off. It's like on a daily basis we order, so and it's only going to increase.
So you'll be a user, but you won't be an investor.
Yeah, because of our own philosophy.
Right. Sunil, final couple of questions before we let you go. I think on IT, the last time you joined us, you were making this point that maybe it could be a decent compounder from here on. Given all the news, do you think IT still is pretty okay? And what about the pharma index? It's coming out of a multi-year, consolidation phase or an underperformance stage.
Right.
How are you all approaching the pharma space?
So IT first, I think IT is one sector where India has global leadership in terms of whatever they do in terms of competency and so on and so forth. And I think that will continue. IT goes through these cycles where there is always in 4-5 years something which is a threat to their sort of business model, And I think now you have this AI and all those related threats. Also, it has coincided with the world economy not being as robust. So maybe in terms of numbers, you might have a quarter or two more before they start to go back to the double-digit kind of a thing. But I think this is one sector where, a 10-12% dollar growth looks possible. The only one thing is that you always had this tailwind of 3-4% rupee depreciation every year.
Yeah.
I think we are now possibly of a view that this 3-4% might become 1-2% dollar depreciation. And to that extent, your rupee growth, instead of 15-16% might come down to 13-14%. But given the fact that the companies distribute everything they make, they're very clean companies, I think they will be at least Nifty or Nifty plus compounders. Pharma goes through mid-cycle sort of, I would say 3-4 year cycles. So you had a great pharma sector move during COVID, and then you had everything sort of reversing because we had more medicines than what we needed, stocked up. Demand went down, and then you also had a price correction.
Yeah.
I think after a long time, we were seeing pharma and large companies available at sub 20 P multiples. So our view is that pharma as a sector, maybe particularly the domestic side, is better than the consumption side. Because there the penetration is already there. In pharma, the penetration is only increasing, the affordability is also increasing. Similar quality of companies, and the P multiples were like 1/3 of what the staple FMCG companies were trading at.
So pharma, domestic, not the US generic.
Domestic is much more sort of visible.
Predictable in that sense.
On the export side, there are lots of ifs and buts and company-specific issues, US FDA, which molecule, and so on and so forth. So if you see the 3-4 large companies which have done well in this quarter, has been because of one drug, which all of them have got approval for. Right. Yeah. So those kind of things will happen, which will be more company to company specific rather than for the whole sector.
Tell us more, Sunil. What do you like? I mean, themes, sub-themes. Infra, capital goods is a area which is picking up. We had SKF India, for example, with us, the management. They said the last capex cycle ended in 2008. His words, not mine. He said, we've been waiting for 15 years, and now finally it looks like we are seeing it. Announcements and spends. So, and they'll see it, right? Bearings are used pretty much everywhere. So,
after a long time, you're seeing everything working well for India.
Right.
Obviously, the only difference is that the valuations have been also working well. It's not as cheap. But on the capex side, if you just look at corporate India,
right.
So normally 80% of the corporate India's net profit gets reinvested in terms of fresh capacity creation. I think that fell to 45% last 2 years because post the COVID situation, post Russia-Ukraine issue, even the companies were not very sure, so they held back their capex. I think now they have enough gunpowder because what they did was they were not spending on capex, so that went away in paring down debt. So balance sheets are great. There is demand. There is this China plus one, maybe Europe plus one also playing in because
capacity utilization is also nearing highs. I mean, 75, 80%.
It will be because last 2-3 years capacity has not been created, and it is also, as I said, coinciding with some export opportunities coming up. Banks have decent balance sheets, so they are in a position to lend. So I think everything has come back in a good way, and government is spending a lot of money on infrastructure. When have you last heard about one single order of 25,000 crores or 50,000 crores coming from government India to one or two companies? So I think it's all working out well.
What's the best way to play it?
No, so I think there are quite a good number of engineering companies, obviously EPC companies also. EPC, because it's not as straightforward to analyze as maybe a cap good companies you have it. The only problem is...
you guys had holdings in Jaykumar.
We have holding in a lot of companies, but what I'm just trying to say is that just because a company is in defense or a company is in railways or a company in engineering, you just can't buy irrespective of the valuation, because ultimately buying a company is like becoming a partner. And you would like to become a partner in a company where valuations also are in your favor.
Correct.
So I think at any point of time, if you're able to get a correction, I
It's a
think
great
we
buying option.
we should have our sort of list ready. Yeah.
Okay, I'm sure people are making their shopping basket ready with your help. Thanks a lot, Sunil, for
Thank
joining
you.
us, and thanks for
for
joining us
having
here
me.
in the studio.
Thank
Really
you.
appreciate you taking the time out. Well, let's move on. Since we were talking about manufacturing companies, the consumer durable space, let's get Blue Star on board. Their Q1 earnings were largely in line with street expectations. The growth is coming in from the EMP segment on both the revenue and the margin front. However, in the AC segment, which is the unitary products segment, that over there the margins have contracted. So Veer Advani, who's the Vice Chairman and Managing Director at Blue Star, joins us now to talk about that. There's also some fundraising approval that they've gotten, so we'll chat more about that. Veer, thanks a lot for joining in. Good morning. Can you first start by telling us about this fundraising plan? There is a fundraising of up to 1,000 crores that the board has approved. So how much are you looking to raise and how many tranches and by when?
So good morning, Sonia. Thanks for having us. So this is part of a longer-term plan that we've been talking to you about over the last maybe 6 quarters, that there's a structural change in our industry. Of course, PLI was announced for the industry. We ourselves have been seeing a big shift to Indian manufacturing, so replacement of import, which has been a priority of the government and the priority of the company. So in anticipation of the growth that we expect in our industry, we've been making our 5-year plans, capital investment plans. And as part of that, we find that it is prudent for us to raise up to 1,000 crores of equity right now. Of course, as we look forward, part of the investments will be funded with some debt, but we're just looking to strengthen the balance sheet and prepare ourselves for what we believe is going to be golden period for the air conditioning industry. So specifically,
yes, you have debt of 400 crores on your books. So will any of the funds that you raised be used to sort of reduce that debt? And what else would you be using the funds for?
So actually, as of this quarter ended, we had about 600 plus crores of debt, gross debt. Net debt, of course, was about 283 crores. We've kept some cash on hand. Of course, as we raise this money, part of it will go to retire some of this debt. And of course, more of it will go into investment in our Sri City plant, which is we already commissioned phase 1. Phase 2 is being commissioned by March of 2024, and then we have a phase 3 that is planned as well. So it's a combination of retirement of debt as well as funding for growth.
All right. Hi, Ms. Advani. Good to have you on the show. For your unitary cooling products business, out there, the growth has been around 7%. Now, some part of the street was expecting a bigger number. Could you tell us this growth was on account of volumes, on pricing? What was it? So break that up for us. And also, it seems you've grown a little bit slower than in comparison to some of your peers who have already given numbers, case in point being Lloyd. Have you lost market share or do you continue to maintain your market share?
Sure. So, I'll step back and talk about the industry. I think Jan to June, which is the full summer season, if you look at it, it's been a flat growth for the industry. That we had a washed out summer. That, of course, has set back the entire industry. Blue Star has actually maintained market share. We took a position that we do not want to get overly aggressive on pricing and impact our margins in a rush to acquire market share in this period, especially when demand was tepid because of the weather. Certainly, some of our competitors may have acquired market share, and that's their strategy. Ours continues to be profitable growth. We are at 13.5% market share even as of Q1. You did mention a 6% growth in revenue. We were able to, of course, compared to Q1 of last year, operating margin has dropped slightly from 8.1% to 7.5%. But I think you'll agree that a 7.5% operating margin in this tough quarter is commendable. And the way we've been able to do it, as part of our longer-term strategy of taking out cost out of our products, making them far more competitive, a combination of R&D, manufacturing, supply chain, I think it's all come together. Frankly, we're quite happy with the performance in Q1, given the market conditions in the unitary products business.
Right. Got that. You mentioned what you believe will be the golden period for air conditioning segment in India. And I think a lot of the other AC players also believe that. But the problem that creates is, there's a lot of capacity coming up in the space, a lot of competition, at least in the foreseeable future. So just comment on that. I mean, what will that mean for profitability or ability to raise prices?
Sure. So first of all, when I speak about this golden age, I actually talk about the entire industry. So I'm looking at everything from unitary products to commercial air conditioning equipment and, of course, commercial refrigeration. So the entire portfolio that we address. Of course, there's going to be increased competition, no doubt about it. There's a lot of capacity coming online. But I think we have been able to navigate these challenges in the past. And I think we're very confident that we're going to be able to navigate the next 5 years from a profitability point of view. Frankly, if you ask me the outlook for whether it is a room air conditioner, a deep freezer, a VRF or a chiller, some of these key products that we have, the outlook for the next several years is extremely positive. Challenge is going to be on margins, which is why we've been working on a total cost management program for the last 2 years. Results are showing, even like I mentioned, if you look at segment 1, this year, we grew 19%, which was good. More importantly, operating margins have expanded from 5.7% to 7%. These are certainly sustainable. And in fact, we think that there's opportunity to grow them further. So I think as far as Blue Star is concerned, we're looking at margin expansion as we grow. Part of it is volume related. Part of it is our own total cost management efficiency that we're driving through the system.
Yeah. All right, Mr. Advani, very quickly before we let you go, on this base of around 8,000 crores of last year, what kind of a revenue growth are you looking at? And you said margins could improve a little bit. So for the year, on the whole, it'll be closer around 8%?
So I think we're looking at double-digit growth this year. No reason why it should happen. And margins will improve in all 3 segments. So we're optimistic for the year.
Okay, optimistic for the year, Mr. Advani. Thanks a lot for joining in. Appreciate your thoughts here on CNBC TV18. That's Blue Star. Let's do one thing. Let's take a quick commercial break. On the other side, we'll be joined by Lakshmipati Deen Dayalan, who's the Chairman and Managing Director at 5-Star Business Finance, to discuss the company's Q1 performance. Later, we'll also be joined by Anuj Jain, the Managing Director and Chief Executive Officer at Kansai Nerolac Paints, to discuss the company's performance for the quarter gone by. Stay tuned.
Welcome back. Well, 5-Star Business Finance is on our radar now. For the first quarter, their business momentum has been strong. AUM growth has been solid. However, net interest margins have declined sharply sequentially. Mr. Lakshmipati Deen Dayalan, Chairman and Managing Director at 5-Star Business, is joining us now to take some questions. So good morning. Great to have you with us here. Thanks for your time. I just want to start with the net interest margin decline. We've seen that not just with you, but many other companies who've reported in your space. Could you tell us why did NIMs decline so sharply? What are you seeing in Q2 so far, and what's the outlook?
Yeah, thank you, Prashant, for this. So let me give a clarity on the NIMs. I think the NIM has not contracted. It has been maintained. But what has happened is once your leverage kicks in, when you borrow more debt, historically, if you see our leverage was sub 1%. As we speak in the quarter of June, our leverage has touched 2%. So once you kick in more leverage, more and more debt is being used in the system. So your NIMs will be contracted. It is a natural process. There's nothing, there's no compression from a spread perspective. There is no compression from a lending perspective. In fact, our borrowing costs are very sweet and attractive. So I think there is nothing to be specifically mentioned on the NIMs, which is a bit down. This is just because of our leverage or debt equity picking up.
Where will they settle at though, sir? Net interest margins?
Yeah, I think what we have guided to the market, to the media channel is our NIMs will be settling around 14-15%. The spreads will be around 12 to 13%.
Okay. The business momentum, Mr. Deendayalan, has been very strong. So you've seen a growth of almost about, disbursals have doubled year on year, and there's been an AUM growth of 43% year on year. What led to that? Which are the pockets which are growing fast? And what is the kind of sustainable growth that you're looking at by the end of FY24?
See, our product is simple. We are lending to the unlent segment of this country. As I've been saying in your channel, a huge part of this country's, especially informal credit demand is being met by the local money lenders and local family members, friends and neighbors. That is where Five-Star goes and disrupts the market and moves the customer from this informal to formal. So this is a very abundant market opportunity, but very specialist, skilled players only can operate this market because you don't have any background about the customers whom you're going to lend. That too, when you lend for a longer period of time, you have to judge the customer before you start lending. So the opportunity is always there. What we saw the momentum from last June, in fact, Five-Star's listing happened. We have crossed 4 full quarters. All the full 4 quarters, the momentum for Five-Star was very strong. I think that is where we also revised our guidance.
Okay, so when you say revise your guidance, what is the guidance that you're looking at by the end of the year on AUM growth in both FY24 and 25?
So we were guiding the market close to 30%. We have revised our guidance to 35%. That will take our AUM close to around 9,200 crores from around 6,900 crores where we settled in last March.
Okay, so you revise your guidance to 35% now from 30% earlier on the AUM front. Got that. What about credit costs? Can you tell us what is the guidance on credit costs and on the return ratios? Have you revised that as well?
No, I think credit cost will remain where it is. Our credit cost guidance to the market was around 1 to 1.25%. So that will remain steady because our underwriting and collection process, what we have been put in the place, is working excellently well. So we don't see anything getting disturbed there. And especially the cash flows of our customers are becoming stronger and stronger as we move past. So the credit guidance remains the same, and ratios ROAs was around 8%. That will remain in the same 8% for a short period. But for a longer guidance, we are guiding around 6.5 to 7% ROA. That changes the ROE metric. Currently, the ROE is around 16.5% for the June quarter. That will move towards 20% plus in long run.
All right, sir, appreciate you stopping by and giving us all of those details. Wishing you all the best for the coming quarter, and we appreciate you joining in and giving us that guidance as well. For the time being, let's move on. Well, it was a strong operational performance coming in from Kansai Nerolac. The margins have expanded. The profits as well were aided by an exceptional one-off due to that sale of land at Thane of around 670 crores. Mr. Anuj Jain, the managing director of the company, joins us on the show. Hi, Mr. Jain, good morning, and thanks so much for joining in. Well, a good showing is what we have seen. Give us a couple of details, though. What was the volume growth in the decorative business? If you could give us that number. How much of it was price realization driven? And also, what is the volume growth you're looking at for the year on the whole?
So if we specifically look at the volume growth for the Q1 for decorative, it is a high single digit, volume growth. And I think the overall sentiments are positive. If we see the monsoons are good, and this year the Diwali is also in the month of November. So generally for the paint industry, whenever Diwali is in the month of November, it's a long festival season. So therefore for the year, the expectations and the outlook is quite upbeat. And I think industry should record a double-digit volume growth in the year.
All right. Industry will record a double-digit growth. What about you? Will you outgrow the industry? And also, if you could give us your sense on market share, I think it's relatively still a little bit low in the high single digits. Where is that headed?
Yeah, the market share is, in our case, it's about less than 10%. But I think if we compare, if we look at our performance quarter-on-quarter basis, I think we are catching up with the market growth. And we are very close to the market growth level. Obviously, internally, always the attempt is to see that how do we outgrow, and that's always the effort. But I think what is important is that we are able to grow in line with the market.
Okay, you're able to grow in line with the market. Can you break it up for us, both in terms of the auto division and the decorative segment? What kind of growth are you seeing? I hear that auto has come back in a big way because, you know, all the supply side constraints have been resolved, etc. But you tell us, what are you seeing on the ground?
Yeah, growth is good. Last year also for auto, the growth was good. But in the first quarter, actually, the auto sale was better than the auto production. And our sale is linked to the production of the auto. So the production number in the passenger vehicle in the quarter one was in the range of 5 to 6% in terms of volume. But obviously there was a higher price realization. Therefore, the value growth is in the double digit in the passenger vehicle segment. But if you look at two-wheeler or the commercial vehicle, you know, they were subdued. But I think going forward, the passenger vehicle demand is expected to remain good. And we expect that even two-wheeler can poise a bounce back, you know, because the way the monsoons are going, I think we are expecting a good recovery in the two-wheeler market, which probably will happen by end of second quarter or the start of the third quarter. I think that will give further flip to the industrial growth.
Okay, so passenger vehicle demand is in double digit, volume growth is in double digit is what you're saying, right? And two-wheeler demand, you're expecting it to come back. What about the decorative paint segment? Have you seen double digit volume growth there as well?
Yes, we feel so, because as I said that this year, this Diwali is in the month of November, the longer festival season, and that always augur well for decorative segment also. And I think the sentiments are positive, the economy is looking good. So the outlook is positive for decorative also.
I have to, Mr. Jain, ask you about the customary question on your assessment of the evolving sort of new competitors and the competitive landscape. Briefly, can you tell us what's your view? How is it building up?
So a lot of companies, good companies, have already entered, you know, in last 1 year and 2 years, and some people are going to enter maybe in the coming year. I think the industry size is good, and the good part of the paint industry is that it has been maintaining close to double-digit growth for last many years. So that way, the size of the industry, if you look at 40-50,000 crore, and every year we get the growth of 4,000, 5,000 crore. So I think there's a good scope of new companies, and for the market, for the consumer, it is good, because whenever there is a good competition, I think you see more innovation, and the penetration of paint industry, the penetration of paint is still low. It is in the range of 50 to 55%. So I think with all these number of players going up and they're participating in terms of marketing activities, innovation, the better product, I feel it will help increasing the growth of the industry in the future.
All right.
What's the premium share, sir? Premiumization has been the other driver for margins. What is it at Kansai now?
So in fact, we have been lagging in terms of the premium contribution, especially in the decorative, and that has been one of our initiatives. And for last 1 year, 1.5 years, our salience in the premium is going up. Even if you look at the quarter one, the saliency of the premium segment has gone up. It has also gone up for the economy segment at the cost of the popular, but premium segment it is going up.
Where is it now? As a percentage?
The percentage, it would be closer to 20% in our case.
All right. Mr. Jain, give us a couple of more details. You sold some land, so you'll be sitting on some cash now, right? Could you quantify what is the total amount of cash you're sitting on the books? And how do you plan on using it? Will you invest it back in the business? Or is there some kind of juicy one-time dividend you're looking to give your shareholders?
So I think you already mentioned the amount. 670 was a consideration, 661 is the net consideration. And obviously we are looking at supporting the business initiatives. It could be in the area of growth and expansion, but largely it is going to support the business initiatives.
Okay, so no one-time special dividend, you'll reinvest it into your business. Your margin number though, various input costs have cooled off. So could you tell us, what is the margin trajectory like to look at? And how much of this gross margin expansion that you're likely to see will be pulled out back into ad spends?
So even if you see in the quarter one, we have increased our marketing expenditure and expenditure into digital and the manpower that is reflecting in our overheads. So that is there. And related to a margin, we don't look at quarter on quarter sequential basis, because in our case we are quite a good mix of decorative industrial, and for each quarter the mix is very different. So we make a comparison with the corresponding last year quarter.
Sure. Anuj, is there any increase in industrial prices that you're expecting? I mean, are the contracts being renegotiated at the moment? And if yes, what could the contribution be from that space, and what is the price increase?
No, no more price increase. I think last 2 years there was a inflation and we have taken the price increase. Now the prices are cooling off, but situation is still volatile in terms of the forex and the crude oil prices. We are waiting to see that whenever it gets stabilized, and assuming that the prices have already cooled off, and if at some stage if they stabilize, then maybe there will be a reverse direction, but there's no price increase.
Okay. And can you tell us what is your share from premium products? I know you referred to this in the past, but just wanted to understand that over the next 2 to 3 years, how much are you targeting from the premium segment? And will this mean, blended margins could move higher as well?
So as I said, that our contribution was in the range of 15 to 16% from the premium products in decorative, which is now in the range of 18 to 20%. So consciously we are working to see that how do we increase the saliency of that. Margins, it's a question of we are also taking initiative in terms of enhancing our marketing expenditure. So for some time, and so I think the salience of premium definitely is a part of our initiative, and we want to increase it further.
Okay, we leave it at that. Thanks a lot for joining in. Appreciate your thoughts here. That's Kansai Nerolac. By the way, the market is still holding up very well, and so many stocks are moving around. Dixon Tech is really your stock of the moment, 7.5% higher on the back of that import curve that has come in on laptops and tablets, and the potential that Dixon would have now that imports will be curbed. So of course that is an ongoing story, but there is potential there, and that's why the street is reacting to that. And Zomato is up 10%. Mitesh Thakkar joins in. Mitesh, I want your thoughts on some of these platform companies. Zomato is doing well, Paytm has moved up, PB Fintech, now delivery has started to move up about 4-5%. How are these charts looking?
See, I think between the names which you've taken, Zomato is clearly, after the numbers yesterday, has picked up fresh momentum. It was already going through an uptrend, and now I think it's kind of accelerated that. My targets for Zomato now, I think, are revised to levels of around 120. So there's still more upside left if you look at the long-term charts. In the short term, you might want to accumulate it slowly, given the fact that the stock has been rallying for many days, and a good entry point would be around 86 to about 87 levels, and the stop loss would be below 80. I think eventually setting towards 120 plus levels. That apart, I think Policy Bazaar is something which I've been liking a lot. The stock has left an uptrend, gone into a consolidation, but I think closer to about 700, 685 zones, very good levels to enter over here. And I think eventually it will, in the short term, it will clear the highs of 780 and head towards 835 kind of zone. So positive on both these names. The others I'm not tracking regularly, so difficult to come.
Dixon is kind of breaking out as well. This level of 4,700 been holding since January of 22. Mitesh, any thoughts? Dixon.
So yes, there's a fresh breakout over here. I think we got a high of around 550, 4,600 in June. And if you look at the historical charts, you've rightly pointed out, Prashant, the level of 4,600, 4,700 was an important level. I think the stock has cleared that. This rally should extend to the earlier weekly highs of 5,600. So very, very positive on the medium-term chart over here. Remains a buy now. If somebody wants to take a position, buy with a stop below 4,640 over here. I suspect, I think, the stock is heading towards 5,700. Give it a few months kind of a time, about 2 to 3 months kind of a time.
Okay, Mitesh, thanks a lot for joining in. Let's take a quick break. When we come back, we'll have the commodity market action with Manisha Gupta. So stay tuned. Well, there's been lots happening in the world of commodities. As we've been telling you, it's going to be the 6th straight weekly gain for crude. So that's definitely been on our radar. But Manisha is here to tell us about the one commodity that she's tracking today. Manisha, over to you.
Well, the inflation concerns clearly seem to be coming back and crude is adding to it. But also what is adding to it is the food prices. So we've seen overnight and this week as well, the wheat and the rice prices continue to gain up. So my focus is on rice, where we have seen prices gain up 2.5% on the week basis and 7% in a month as well. I also want to put on focus on where the Asian rice prices are going. Remember, 90% of the world consumption in sense of rice happens in Asia itself. So the Indian prices for parboiled are trading at a record highs of $450 to $455 a ton. We're looking at a 15-year highs in sense of rice prices in Vietnam and Thailand as well at $600 to $630 a ton here. And the prices have risen quite strongly in the last week, 15 days as well. This has happened since there are growing supply concerns in the global markets there. The Black Sea grain deal, falling apart was the first trigger into the markets for the rice prices to continue to gain on the higher side. The global markets are trading at a 2-month highs in sense of futures there. And the support also comes in from the fact after India banned non-basmati rice exports there. Not just that, India also, or the Food Corporation of India, also has stopped giving rice now to 100-odd distilleries in the country which produce ethanol. And there's a lot of investment that has gone there. A lot of industry from ethanol also seems to be talking to the ministry officials right now. That's about India. But Thailand, which is the world's second largest exporter, also is bracing for a potential drought. And we've seen prices go to a multi-year highs onto that one. There are concerns also coming in from UAE, which says that for the next 4 months, they are putting in a temporary ban on export and re-export of rice, which is coming in from other countries. So now there are various countries jumping in, and we are looking at protectionism measures coming in from them as well. If you look at the global markets, well, the rice stocks are now at the lowest in 1 year. Not too long before, there also was a report from Fitch which said that you are looking at a global deficit, the highest in a couple of decades really, and to the tune of 8.7 million tons. Fitch also, though, goes on to say that by the next year, you would be looking at higher production coming in because there are higher prices right now, and that would take prices nearly 10% down in the next year. But for the current year, until now, we are 5% higher, and the rice prices have continued to gain in last couple of years as well. As you can see, 2021, 2022, we have seen double-digit percentage growth in case of rice prices. That could be the case this year as well, but higher production expectations next year could bring the prices lower.
Okay, thanks a lot, Manisha, for that. The stock of the moment, though, undoubtedly is Zomato. Double-digit gains over there and a fresh high on Zomato after reporting profitability for the first time. Mangalam is here to tell us more about that. Mangalam, of course, there's a lot of to and fro on how they came, they sort of landed on this profit number. But be that as it may, the street has given it a thumbs up.
The street has given it a thumbs up because the street is also not looking at the bottom line. What they're really looking at is the operational parameters, and out there we've seen a sharp improvement. In fact, we'll talk about that in greater detail later. Important to know what brokerages have also read through as well. JP Morgan has increased their target. In fact, most brokerages this morning have upgraded their share price as well as their earnings targets going forward because of the surprise that the company has delivered on the bottom line and the operational performance as well. They say that adjusted EBITDA as well as the net profit break-even has come ahead of the FY24 timeline. Now the management expects 20% QOQ growth coming in for Blinkit as well, and they've raised their revenue estimates by 5 to 8% and margin estimates by 120 to 400 basis points. UBS too has a buy call target closer to the triple-digit mark, 90 rupees per share. They say there has been a solid beat in the first quarter. HSBC has raised their target price from 93 rupees to 102 rupees as they see significant upside coming in from Blinkit now that the food business is on its operating leverage move ahead as well. And Nomura is the only seller on the stock. They have a reduced call with a target of 60 odd rupees. Why is that? Because they believe that sustaining this high gross order value growth and contribution margins for a long term will be challenging. So basis that, they've taken a bit of a contra call. Despite that, Zomato, the stock is at a fresh 52-week high.
All right, Mangalam, thanks for that. That's Zomato. Mangalam, Dabur saw uncharacteristic, if I can call it that, 6.5% move early on. It's cooled off a little bit. It's up 2%, but take us through that as well.
Well, it was underperforming in yesterday's trading session, and a large part of that was the fears around honey. Thereafter, the numbers that came in, they were largely in line with expectations, and we spoke to the management, and the commentary was by and large positive as well. This morning, we've got an upgrade coming in from JP Morgan. They've upgraded the stock to overweight. Target price has been raised from 635, from 570 odd rupees to 635 rupees. And the reason why they are bullish on the stock is that the volume trajectory of the company is increasing. They reported 3% in the first quarter, but that was largely impacted by the beverage portfolio. Going forward, it is going to be in the high single digits, so that's a positive. And they do believe that there is potential for the margins to surprise positively on the idea of benign cost of goods sold as well as better product mix as well. And more importantly, the stock over the last 1 year or so has underperformed the Nifty. So perhaps it's now time for Dabur to shine.
Okay, now time for Dabur to shine. Many more orders on Zomato. Lots of stocks in focus today. Let's slip into a quick break. On the other side, our special segment, CNBC-TV18 Citizen Monetary Policy Committee. Lata will get chatting with a host of experts to decode which way the RBI could move on the 10th of August on the next monetary policy. Stay tuned.
Reserve Bank's monetary policy is due on August 10, and this time tomatoes are likely to hijack the policy. As always, CNBC-TV18 Citizens Monetary Policy Committee meets ahead of the RBI MPC to discuss what should the rate policy be. Joining me now are Sajid Chinoy of JP Morgan, Shaumyakanti Ghosh of SBI, Shamiran Chakrabarti of Citi, Sonal Verma of Nomura, and our chairman, Dr. Pranab Sen, joining us from New Delhi. Gentlemen and Sonal, thank you very much indeed. Well, you know, tomatoes will figure in the discussion. So, Shamiran, let me start with you on that. Our poll threw up a number of 9% food inflation for July and maybe 6.5 or 6.6 for headline. How worried should we be about food inflation in general?
So, Lata, I mean, obviously, tomato prices are it's in everybody's mind, but at least across the vegetable basket, the 11 vegetables that we can track, there has been a significant increase for all of them. Oh. So it's a generalized vegetable price inflation. We have, on a month-on-month basis, the vegetable price inflation could be 35–40% as well. So, and because it's not showing up as much in onions and potatoes, a little bit there as well, probably we're not discussing it enough. But the good news is that beyond vegetables, the rest of the food index is still doing reasonably okay. Mm-hmm. And it has not yet passed on to the non-food core part of the index.
There was a scare on rice and pulses, no?
I mean, there is a very small increase, but it's more the narrative which is worrying on rice, edible oil, etc., where going forward there could be price pressures, but at least for this month's data, that's not really the scary part. And there is the disinflation process on the core, which is continuing as a part of even global trend. So altogether, we think around 6.8 type of a number is possible headline for July. But the key question is that how long would these prices stay elevated, and would there be at all any impact on inflation expectations, etc., which generally are sensitive to things like vegetable prices.
Will RBI raise its inflation forecast for the full year?
It is mechanically they will have to raise the number because if you have 2-3 months of much more elevated print, then the average will obviously go up. But the critical question would be that whether they will change the 9 to 12 month ahead inflation forecast number or not. Okay. Particularly because this quarter next year would have this in the base, and it could mean a significant drop in inflation as well.
You referred that core inflation is softening. Yes, from January 6.2 or thereabouts, it's come down to 5. But Soumya, now fuel has started rising. It looks like global commodity prices are kind of ebbing out or bottoming out. Do you think we will have the core inflation fall for any bit longer? Should we worry about inflation more generally?
Yeah, no, I think, Lata, just taking from Shamiran's point of view, I think we now have a paradoxical situation of find. All this through we have been talking about a sticky core, and the gap between the core and the headline inflation this month could be as much as 150 basis points, if not more than that. In the past also we have seen that 150 to 170 basis point has been the gap. But the larger question is that whether the core could be sustained at that level. I think below 5 is difficult to sustain, but possibly, given the current trends in core inflation, I think it's possible that the core is sustained below 5.5%. And the other important point is that food prices, of course, are a point of worry. But the larger question is that there has been studies in India and which says that headline converges towards core. So if that is the case, and that has happened in the past also, so even if core stays below, say, 5.5, so headline inflation, which actually excluding vegetable is running at around 5.2% for the last couple of months, I think if that is the trend, we should not worry too much as of now, even though the inflation numbers for the next 2 months could be a little bit ugly.
Okay. I'm still, looking at growth numbers globally, which seem to be surprising on the upside, at least in the US. So, Sajid, if you can just give us the global elements that RBI would watch.
Sure, Lata. This is a theme we've been discussing for 6 months now, right? And the point I've been making repeatedly is this time has been different globally because there's an element of global resilience that hasn't been fully appreciated. Both the fact that balance sheets in the private sector are much stronger, households and corporates. And the fact that everybody focused in 2023 on the rate hikes, what they missed out was there was another thing happening. The adverse supply shocks from previous years were unwinding, and that was helping growth and disinflationary. Bottom line is that I think there are three things to watch globally. One is more resilience. First half global growth is tracking 2.7% above trend. That resilience is showing up in growth, it's showing up in labor markets. That has meant that markets have begun to price out a near-term recession and the rate cuts that come with it. One of the reasons why the US 10-year was at 4% even a month ago, much before the whole Fitch episode, right? Number two, you're seeing that the lack of a near-term recession prospect means commodities are inching up. Oil is now back at $85 a barrel. So the first thing will be on rates and commodities, but there are two important other elements to keep in mind. A sectoral shift where you're getting services may slow, but we may go back to manufacturing picking up in the second half of the year. There's a restocking cycle underway. Tech has bottomed out. Final goods consumption is holding up. And so if you see that rotation, again, away from services and towards goods, that may put a floor on the global goods disinflation. In fact, you may get a little bit more goods inflation later in the year. Okay. The third element and the final one is US exceptionalism. We're seeing Europe is disappointing, China has disappointed, but the US is holding up. And all else equal, that means a stronger dollar, which we've begun to see the last few weeks. And a stronger dollar, therefore, puts some pressure on emerging market currencies. So there are these three things going on. Commodities may be slightly higher. Interest rates around the world may be higher. Central banks higher for longer. The dollar may strengthen a little bit because of US exceptionalism. And there's a flaw on the goods disinflation because of the sectoral rotation back from services to goods.
Okay. Sonal, a similar question to you. Are the global impulses actually likely to keep the Reserve Bank more cautious and hawkish and not dovish? What are your thoughts?
I think as things stand today, there have been two, I would say, like main developments and still progressing. One is, as Sajid was mentioning, in terms of US resilience. And one thing that stands out is the current narrative of soft landing. Or no landing, because this to us is not a steady state. Either growth is so resilient, as Sajid mentioned, that there's going to be a reacceleration of inflation and therefore Fed needs to do more, or we will finally see the transmission play out and labor market weakens and growth slows down. So in our mind, one of these two scenarios is going to play out. Near term, it does look like disinflation should sustain, but over the next 6 to 9 months, we actually think that the lags will play out and the credit standards are tightening, as we've seen with the senior loan officers survey. So that spills over into business investment and eventually into the labor market. So our view is the US exceptionalism is not going to last for very long. So that is one. I think that's, from a central bank's perspective, given the uncertainty, central bank needs to be prepared for either of the scenarios. Okay. And second is on China, we are hearing a lot more in terms of stimulus measures for consumption, property, infrastructure. We've seen some measures, I would say not enough to convincingly say that the investment and property cycle will turn around. Of course, if it does, then it would permanently put a lid on commodity prices in terms of flow. If not, then there's also a risk that commodity rise may not sustain. So I think there's tremendous amount of uncertainty right now in terms of the direction of global macro. And in that environment, from a policy perspective, whether it's the forward view on growth or the forward view on inflation, I think we need to be prepared for all scenarios right now.
Okay. So more likely the RBI will stay pat because you don't know which way things are shaping up. But those questions later. Dr. Sen, if you can put all this together, are you convinced that growth is a little stronger than expected and inflation a little higher than expected? What should the Reserve Bank and the MPC convey, hawkish or dovish?
Well, I think there'd have to be a lot more nuance than that. And, as I think everybody has really said, there is a lot of uncertainty. There have been upside surprises, but the vulnerabilities of the global economy continue to exist, and we don't know how they're going to play out. But as things stand, the RBI really is facing two challenges which they're going to have to deal with. The first, of course, the obvious one is the vegetable prices. And the question is, to what extent will this actually sort of influence inflationary expectations in the country? That's one clear one. The other one is the uncertainty that's going to be around the exchange rate. At the moment, the trends seem to indicate that the exchange rate will continue to weaken, which means that there's going to be an upward pressure on inflation from the external side, despite, regardless of what is happening to global prices. So these two, I think, are going to be there at the top of their minds. Now, there are, of course, upside surprises that can happen, but that is something that the RBI can react to if and when it happens. So at the moment, if I were them, I would play it very, very cautious.
Cautious, I would assume that that would mean somewhat status quoist. In fact, that's the feeling I get from most of the people I talk. Better not do anything. So what we have to really concentrate on, how will they sound? Will they sound hawkish or dovish? Those questions after the break.